Mr. Koudounis, based on your experiences as a big investor and obviously as an executive member of companies that really make investments not necessarily only in the US but abroad, what is the key to actually contributing to sustainability, bearing in mind that companies are there to make profit?
Look, I think it's very important in the world of sustainability that you have to balance and make sure that we have fiduciary responsibility as investors, as people that sell mutual funds, to have returns for our clients, right? So it's important that if we're going to launch an ESG product, that we keep profitability in mind. So when we got into the business, I acquired a team about a year and a half ago or so that's been doing this for over 25 years. And we were looking for 3-4 years before we found this team. And they're the first team to actually do a fossil-free fund before ESG was a buzzword, and before sustainability was really, really popular. That's how they believed. They have a proprietary screening method that screens for the ESG. And the most important thing is not just to be ESG investors, but to be able to to do it in a profitable manner. And our team in the past, for over 25 years, has beaten the benchmarks, okay, in what their strategies were. For instance, for the U.S. domestic, they're benchmarked against the S&P. So if I could tell you that I can offer you an ESG product and beat the S&P and still be ESG, that's extremely attractive. Not very many people can do that, and that's why it took a long time for us to find this team. Now, past performance doesn't always predict future performance, but we're very optimistic that we can repeat this since they've been doing it consistently year over year. And in the global type of strategies, they're benched against the MSCI, and they've beaten those almost every year as well. So it was important for me, because I'm a businessman at the end of the day, that if we're going to get into this business, not only do we want to be in this business, because I think it's important, but we also want to raise funds and make money, and the only way to do that is to give performance to your clients.
Is sustainability and ESG a prerequisite, though, for any company? What lies ahead in the future?
Look, every company is getting a lot more scrutiny, and it's only going to get worse. ESG is here to stay. There's tremendous amount of scrutiny, not just in the particular strategies that we're offering, but in everything we do within the company. We have a committee that I chair for ESG. We have all our senior members on it. We try to do things in the way we invest in all our funds. We screen all our funds, not necessarily, they're not all ESG by any stretch, but we look to see where they fall, right? And so there's also a governance that we make sure that we follow. And it's just also within the firm, whether it be making sure that we got rid of all the styrofoam coffee cups and paper and straws and everything else, and trying to be a lot more green is really, really important.
By 2030, there was a report that by 2030, the Arctic Sea, the Arctic ice will melt in the summer. So that brings us in front of a climate crisis, which seems to be one of the major issues that we really need to deal with it as soon as possible. How does that affect the sustainability? Because one of the ESGs is the environment.
Sure. Look, the environment is really important. It's important for all of us. So is social. We don't want 6-year-old kids working at a shoe company in kind of like that type of bad labor. And also, in terms of governance, diversity of boards and everything else. It's important. It's very important. It's important that we get involved in it. And the environment, as my dear friend Dean Metropoulos probably spoke about, and he can speak at many lengths, and we'll hear in a little bit, about water. He owns the largest water company, about how important it is, what we can do for the society. So that is one of the things that we screen for to make sure that we invest in companies that at least slow down or don't do as much of the damage that we know that some of these companies do.